Good evening. This is the Elliott wave update for the NASDAQ 100 for Wednesday, July 13th, 2022. Interesting day, to say the least. But then again, I must be honest and say that trading a triangle pattern that actually is following through as expected for a triangle pattern can be very challenging, particularly when you're balancing out what the market is doing to correspond with where it is within the Elliott count. And so again, starting here on the daily chart, I continue to count this now as a minor 4, and it has broken down into a triangle pattern. And so what we have completed thus far in this triangle pattern is waves A, B, C, and I believe today completed wave D. Now, I just want to also begin with, here on the daily, you can see pretty clearly the intent of the market, I believe, because now we've drawn channel lines that also triangle. So now we can employ a few additional tools to tell us where this E wave may or may not get to. So to do that, I'm going to take this down to the hourly chart. There's the C, there's the D, and this was ugly. I have to say, this was yesterday where on the opening, they had to have Apple. They had to have a few of these stocks, and they pushed and they came in, they got it, and then it just backed off and then dropped. And then this is an anticipation of this morning. So this is yesterday. Now, overnight, we rally, we're up, we're down, we're up, we're down. And basically we're up a little bit, but hanging out right here at the 200. In fact, that's kind of where we were. And the number comes out, the CPI number comes out, and the first move is that somebody buys it up to 11,970. And if this was, and that was the pretty much a reaction after, bam and bam, and it was a good trade all the way down. But there were points where they would buy it up and then they would drop it, and then we opened, and they just decided to buy it. And you're like, okay. Now, here prior, I was already telling people in the room and others that the market, they were buying the market all night and kept it higher all night in the face of this number. And in fact, the initial reaction, which I am crediting to fat finger mistake, or just like, whoa, I hit the wrong button. And that I would anticipate that there were stacked buy orders to do here in the US at our open, buy on open. And that's pretty much what happened. But they just kept it up. So a whole scenario changes, but it's all compacted within this triangle pattern, which is basically, when we break it down and we break it apart, the triangle pattern is just mass confusion, because the market will move with the appearance of purpose. We're buying because we know something nobody else knows, and we're just going higher. And in all honesty, it's not that granular. It's computerized, it's quantitative, it's a computer doing a scan and picking, whoa, look at this, and being able to put together trades. And that's what happens. And a lot of times it involves the underlying, which gets bought or sold. In this case, the NASDAQ as an index, but because it's an index of 100 stocks, each time one of those stocks trades, boom, we get a new price. If they all trade together in the same direction, we get a lot of new prices very, very quickly, all in one direction. So Today was a very, very strong mixture. And when it decided that it wanted to sell, it sold. And so, and as well as that, it wasn't always as easy to trade. Again, we're in a correction. So we're still not back in trend, even though it likely felt that at certain points today, we were dropping in trend, but it actually wasn't. Trend will just build like this. Boom, boom, boom. Not, it does look like it could be a 3 fairly decent, strong down days, but that's just for the D wave. Now we're going to get 1 or 2 or 3 up waves, maybe. So it truly is not the easiest type of market to trade. But, and I've come to an understanding that how I see the market is a product of my experience with the NASDAQ, my experience with the moving averages, my experience with Elliott, Fibonacci, and also just with plain old trading. And then trading this product. That there are times when I will see something, but it's a see and react. And I didn't mean to click my fingers into this mic, but that's what it's like. And that could be the buy and the sell. So it's like when your competition is out there doing the same thing, and your competition is a computer, once in a great while, your brain will pick it up and you get this really quick, easy trade. And it's like, nice. But it can be hard to try and go against what many will call a falling knife. You know, the market's going in one direction, but it also could be a knife being thrown up, and it has trajectory. It's like trying to stop a bullet that somebody fired up into the air. It's going to go right through you. So same concept. And here we sit in this triangle. We have an E wave left to do. So we continue to have the same perception or the same scenario. The market will rally, and we stand a chance that it could just kind of nudge itself right above that upper trend line or channel line, maybe even go and touch that 12,273. But wherever it finishes, the reaction or the rejection should be very much in line with what we have seen 2 days running. That I believe. And then also the E wave in and of itself will be an ABC. So there's going to be a lot of herky and jerking all within this E wave as it plays out. Let's drop down to that hourly chart. So anyway, my point is in that I am realizing more on how much we need to kind of collectively wrap ourselves around just what is happening, and not really attempt to throw a reason as to why, but understanding the psychology and the characteristics that go behind these types of Elliott moves. So when I'm discussing a triangle pattern, I already know it's going to be difficult. I already know it's not going to be pretty. I already know it's not going to be clear. It truly isn't. And Lord knows, you guys are listening to me now again. Yes, you already know this. So, but it is tradable. But then again, it's my experience of going through other triangles, going through these, this doesn't look right type of moves, but actually standing back and seeing what is happening and then allowing for that, getting the move, and then being ready for what would be coming next. Right now, we need an E wave up. And that is, yep, I can just draw here. I'm just going to put retracements from the top of the C wave down to the bottom of the D wave. And on the way back up, 618 is a big level. But being that it's the E wave, you're kind of looking like it's going to go above where it should. So they may take a stab at here. They could. And again, from here, you're looking at 300, 400 points. And tomorrow morning, we have jobless claims and producer price index. But I suppose that there was somebody was telling me that there was a spin going around out there that, they don't care about producer prices. Really? That was a big surprise to me. Because if they didn't care about PPI, then why would they care about CPI? And CPI just showed that we are at 41-year highs. So in other words, the last time inflation was running at levels that we're seeing right now was in 1981. I challenge you to go back and look at the work of Paul Volcker. That was what had to take place back in 1981 to correct the same situation that we're now walking through. In fact, I would imagine that the situation we're walking through right now has been greatly aggravated simply because of the amount of money we have printed as the United States of America through the good faith and credit of, through the Federal Reserve, through the Treasury, we've created trillions of dollars, jacked them into the system, and lent it all out. So there's a lot of things that are different that will have an effect on inflation. And unfortunately, it just in my way, it's come home to roost. Now, having said that, we're likely going to see this thing pop. What is going to be behind it is going to be, we're now looking, staring down, yes, these numbers, these economic numbers, but also Friday's expiration. If you notice today, just keep an eye on what they're doing. They're coming in after Apple. They're coming in after, well, they were for a little bit in Google, but then you see where they're coming in. They went after AMD today. AMD now, I believe, wants to see 80 on Friday. So there's that hint. Are they really going to try to push us to 80? They got real close to 79 today. On a day of total negative, somehow AMD and chip makers are going to work their way around inflation, work their way around the shortages, work their way around the inability to get the product to anybody, i.e. the chip. So it's amazing, but again, take it one step further. That will be noise. You've heard me speak about noise. That would be noise. Because the reality is, it is an algorithm, and it's what is trading, and it's how that's combined to produce the price of the stock. So all it is buying and selling the stock using options and the underlying. And that's what these guys are doing. So they're done deals. They're trades that are over and done, and they move on. So they're not hung up on the price. We are. So we got to play along with them. And again, what I look for from here, we need an E wave up, and that E wave certainly can go 11,931, 11,000 or 12,000 for sure. Why wouldn't we think that it couldn't? This is the NASDAQ. They'll put it where they want it. That's actually, folks, how much money is still out there floating around, because it can be put into this market and push these stock prices higher just because this is the money flow. And right now the money is flowing still. I think it's going to start flowing out in certain ways, but that may come after Friday. That may come Friday's expiration. And then we'll see. And because once again, we go through another period where it's going to be money changing hands, because we move right from that right into earnings season. Okay, tomorrow we will wait and we will see what PPI brings us. Again, so if we're in that same situation, I still think if we can call an E wave at many different places. If this market decides to go from here and just die, I can switch it back around, put the E wave there. It's not going to be pretty. I will not like it. But if they decide to tank it and start really breaking down and getting below 11,351, which it did not do today. And if you remember, what I'm looking for on an E-wave completion is a reversal. It's a thrust out of the triangle. If it ends up here, it should thrust out of the triangle. And that thrust will take us below 11,351. It was looking like it was going to do it today. I'll give you that. Got down to 11,479, but no way. And it continued. That's all a part of an E wave, a part of a triangle pattern. Indecision, craziness. Moral of the story, folks, you go in, you make your money where you can make it, and then you keep it and walk away. Be done. Enjoy the day. It's the summer. Wherever we are, we're in North America, most likely. It's summer. Enjoy the day. No matter if it's a summer storm by where you are and it's raining, read a book and enjoy the rain and enjoy the sound of the rain. I'm just telling you. Anyway, I'm now rambling on and I apologize. So downside would be announcing the completion of the triangle, and that would suggest we're getting a thrust out of this triangle, which is going to take us below these levels very quickly. It could happen with the PPI. It could happen with jobless claims plus PPI. And then maybe still get the same reaction out of it. I don't know. We will wait, we will see, we will play with what's in front of us. But should it break, we're going to have reassessing our odds that it's done. And definitively, we could put a nail down and say, yep, when it goes below 11,068, that's the starting point of wave A. That would be the absolute convincing. And if it did it all in one day, it would be astounding. So I'm not expecting that. All right, I'm going to leave it right there. Tomorrow, CPI jobless claims early. Have a great trading day. Next update will be on Thursday, July 14th.